Hey guys, Joel Frank here, market analyst for YouTrading, and in today's video I'm going to be talking about a technical indicator that I do watch when I'm making trading or investing decisions, and it is called, well, there's two names for it, either a golden cross or a death cross. Sounds a little bit ominous, but what it is really is just when, well, a golden cross is when a short-term moving average, an important short-term moving average, usually the 50-day moving average or the 21-day moving average, moves above a longer-term moving average, such as the 200-day moving average. That's a golden cross because it indicates a bullish, or it potentially indicates a bullish shift in the market. Equally, a death cross is when that important short-term moving average moves below the longer-term moving average, indicating a bearish shift in the market's momentum, pretty much. Now, specifically, the ones that I tend to look at are the 50-day moving average and the 200-day moving average. This is, it gives you a longer term. It's sort of a longer term technical indicator because it doesn't really happen that often. I've got the S&P 500 here, 1-day candlesticks. So we are looking at it over a long time horizon. You can see there was a death cross earlier this year. There was a pretty good sign at the time that we were in a bear market. Granted, like when it happened, we quite quickly saw a market rally, but it was a bear market rally, and then we fell and hit new annual lows and kept pushing lower. So that death cross that we saw earlier this year was a pretty good sign that more volatility, more downside was in store at the time. But historically, or at least in the last 5 years or so, the one that I'm more interested in with the S&P 500 is actually the Golden Cross, because on numerous occasions, the Golden Cross has predicted long bull markets. I'm talking like a year-long or 2-year-long bull market. Like, look at this most recent one. It's back in 2020, in July. Obviously, 2020, we all remember what happened there. The coronavirus pandemic comes, stocks rapidly pull back from record highs in February to, 40. What was the drop actually? It was about 40%, I think. Or it was about, okay, peak to trough during the coronavirus panic was about a 35% drop in the S&P 500. But when that bull market, started to get going, as the Fed and all the central banks cut interest rates to zero and started doing unlimited QE, and all of the governments did all this massive stimulus, well, that helped support the market. And then we got the Golden Cross, and then look at this. It was like a year and a half long bull market, all the way to the start of this year, pretty much from mid 2020. And, let's just actually work that out. From when the Golden Cross happened to the peak earlier this year, nearly 60% rally. Wow. We've also got a few other good examples of this happening, not quite as extreme a rally, but we had a Golden Cross take place in March 2019. We saw an impressive rally then to fresh all-time highs, going back even further. This is probably the longest bull market, actually, in recent years after a Golden Cross. We had a Golden Cross in April 2016, and then we had this bull market run pretty much unobstructed all the way until October 2018. I mean, you'd probably have to go, yeah, okay, not in October 2018 is when that bull market ended. But yeah, that's a more than 2 year or 2.5 year practically bull market. So my case in point here, I don't need to go on too much about what's happened in the past with this Golden Cross. But, it's going to be a big moment if and when. I mean, I think it's a matter of when, really, because stocks, you'd imagine, are going to recover at some point. When this 50-day moving average here in red crosses back above this 200-day moving average in green, that could be a signal that we're in for another sustained bull market in the S&P 500. We do have some challenging technicals, challenging fundamental backdrop with high inflation, tightening central banks, slowing growth, all that kind of stuff. And this downtrend that we're still in, we do have to overcome all these things before the next bull market can really get kicking. But when this 50-day ME crosses that 200-day moving average, perhaps we could start talking about the S&P 500 going back above 5,000, pushing into the mid 5,000s once again. But anyway, I hope this video shed some light on golden crosses and death crosses and how to use them in your trading and investing. Hope you enjoyed it, and I will see you all in the next one.